Good evening, everyone. My name is Micaela Milian, or Mika, and I am from ESME Philippines, and I will be your host for today's webinar. Before we begin, if any of you have questions regarding the discussion, please don't hesitate to send them to us by entering it in the comment section of whatever social media platform you are watching this on, and I will be here to cater to them for our guest speaker. Hello, everyone. Welcome to the live webinar series of ESME.ph, an e-learning marketplace for Filipino professionals where one can develop relevant and in-demand skills through master classes in different fields of learning. If you want to learn more about us, feel free to visit our page at www.esme or esme.ph. For those who are watching on Facebook, YouTube, and LinkedIn, feel free to share the link to this stream to people whom you think will be interested in today's topic. This webinar is in partnership with the ASEAN Youth Organization, an ASEAN-approved nonprofit organization that spreads awareness of the ASEAN to over 200 million young people in Southeast Asia. This webinar is also brought to you by the Rotary Club of Alabang Madrigal Business Park. So, our topic for today is all about how to make a scalable and investor-ready company. According to the Corporate Finance Institute, the scalability of a business relies on many factors: competent leadership, effective communication, sufficient assessment tools, to name a few. These are all necessary ingredients to preparing a company to scale and be ready to take on investors. Now, how do we consolidate all of that? This is where our speaker comes in. Our speaker is a man of many talents. Not only is he an investment banker, mentor, judge, and founder of many companies, he is also a keynote speaker in several chambers of commerce. He is a TEDx speaker and a consultant for the Asian Development Bank. He is a business scalability expert and a finance, technology, and growth consultant whose focus is on SMEs, mid-level corporates, and he also advises companies on private equity investments in the startup and SME space. Created in 1998, our speaker is currently the CEO and founder of Virtualinfocom, one of India's first game development and VR app development companies. Ladies and gentlemen, let us all welcome Mr. Arijit Bhattacharyya.
Thank you so much for the lovely introduction. And I'm really glad and happy that I'm here and trying to make it really, really simple for all of you guys.
We're very
We have
glad
an
to
interesting
have
topic.
you.
Is it audible? My audio is working?
Yes. So I think we should
Okay.
get the ball rolling and you can start already.
Okay, super. So, hi everyone. It's a pleasure to be here, and I'm really glad and happy that I'll be sharing few of my thoughts, few of my knowledge, whatever I have regarding create a company which is investable for the investors. At the same time, how to create a company and organization which can actually make money for investors. Let me give you a brief background. The way I started my journey, I started back in 98. I was 17 years old then, and I had a deep passion to start something on animation, game development, and of course, latest generation technology. On those days, to be very honest, if you really wanted to surf internet, there were very limited number of websites available. And regarding browser, we used to use Internet Explorer as a browser. For operating system, it was Windows 98 as a version, and before that it was Windows 95. So I started with Windows 95 as an OS, and along with few of the Unix operating system that we had. While starting my journey, I realized that there is no ecosystem that exists to support entrepreneurs, and the very term entrepreneur was actually totally new on those times. So whatever I have learned, my learning actually for last 22 and a half years goes mainly on market experience and working with multiple number of corporates and creating several global companies. So at the moment, I run an investment banking company based out of India called Entrepreneur Space, which really caters on M&A, merger acquisitions, and raising funds for SMEs, startups. It goes with seed level, growth level, and scale up level. And I run another organization which is based out of Australia, and it's in Sydney. And that organization is basically working on mainly investment banking with two of my beautiful partners. And apart from that fact, I run a few other organizations, invested in quite a few organizations so that they can grow. And whatever I did out of giving back to the community. It was not at all started as a business of investment banking business. It all started with a passion to give back to the community itself, to give back to the world itself. So whoever came in front of me, they say that, hey, you know what, I started my venture. So I don't know how to do it, how to run it, how to execute things. I felt that this was me a couple of years back, who never had any kind of clue. So slowly I started helping people, and that became a very term called mentoring. And of course, when you mentor people, you need to handhold people. So that's how I have been giving a lot of market connect, a lot of network of mine, whatever small and big I did. And this incident I'm sharing, like 16 years back, I started mentoring people globally. Of course, that started with my own country, India, and slowly I started exploring Asian market. So the next country I started mentoring is mainly in Thailand. Slowly that became US market. That slowly expanded into Australia, expanded into Europe. So right now I'm pretty well connected with 90 plus countries with very closed door communities, working very closely with global banks, working very closely with global leaders. Uh, Consultants, banks, incubation center, innovation centers, co-working places. I'm in board of several different incubation centers. I try to help them how to raise fund and how to materialize their incubatees and grow. So I'm advisor and mentor to India's one of the finest and largest incubation center called IIMC. I try to help the local ecosystem. Along with that, we have a beautiful team of global team, which we call as international business developer. We have existence into 7 different countries at the moment, wherein we are trying to create ecosystem of good people who will be giving back to the community. So let me come back to the original topic. The topic was actually how to create a sellable company. The reason I'm giving the all these histories and geography because so that you can understand me, the perspective that I want to share. I'm not at all going to talk anything about theoretical aspect because fundraising or creating fundable company is not theory. It's all about science and art. It's all about the real market knowledge. It's not about how good I speak. It's about how scientific you are when you are actually making your company investable. So how will you do it? Let me go step by step. On company formation, you may have idea and you feel that uh, I think this is okay if I go step by step. It will help you to understand things. And in the chat box, please feel free to ask me questions. Feel free to tell me that if I'm really going very fast, then I'll slow down. Okay, so when you start, usually as a startup, you have a lot of passion, you have great ideas, beautiful dreams that you'll be probably solving some issue in the world, probably you'll be making some money. Everything is taken for granted, all great. But when you talk about fundable company, investable company, if you really want to create your startup as an investable farm, my suggestion, the first one would be create a great team. If you are a solo entrepreneur, which we call as a solopreneur, it's really hard to fetch any kind of angel investor. Any angel investor would look for how good is your team, who are there in your board, who is there in your advisory council, probably if you have a product, if the product is scalable, or if the product is right now doing some kind of selling or not. So the first point you need is a good team. Now, who is a good team? Your employees are not your teammates. Those are employees. They are getting paid to do your work. Okay. So whoever is getting payment and doing their own stuff is not the team. The team is the one who is trying to back up you, save you from the dangers, probably give you some amount of support, which can actually grow your company. Okay. Now that team can be a very small one. It can be a 3 people team. It can be a 4 people team. It can be a 10 people team. Doesn't matter. But team strength should be complementary to each other. For a tips, if you are very good in marketing, you need someone on board who is really great in finance, right? You can rely on that gentleman or maybe that lady. Okay. Now, if you are really great as a founder, if you're really great in maybe arts, perfectly fine. Get someone on board who can actually understand the money part of it. So every business, whenever you start, every business, every entrepreneur actually ride on a tiger. It's a journey, okay? And this journey is a never-ending journey. You just can't stop all of a sudden. If you stop, the tiger will eat you, right? Because it's hungry and you're riding, okay? So the art is, how will you earn money so that you can feed your tiger? If your business is your tiger, you need that food so that it can sustain itself. It can eat and it can run. You can't overfeed your tiger. You can't overfeed your business. That's an art. If you overfeed, it will become bulky, right? So a bulky tiger can't run fast, right? So it's your duty how you are going to raise your cub. Now that cub can become maybe a jaguar, can be a cheetah, it can be a Royal Bengal tiger. It depends on you. Now, how will you create that team? I've been talking about creating which can complementary to each other, who can support each other. Well, uh, small tips. If you really need an organization which can actually support ecosystem of investors, you need at least 3 to 5 people on board. Finance guy, sales guy, okay, marketing guy, the operation guy who is going to take care of the operation, and the face of the company. Now that face can be you, my friend. That face can be the founder. But sometimes founders are good at as a thought leader. Maybe they are not as good as a face. I'm not talking about the beauty. I'm talking about how good they are pitching in front of any investor. Okay. So if you don't have that capability, doesn't matter. Get someone on board who can actually do awesome in presentations. If you have that 5 people team, the next thing that you need is a pitch deck, and you need an option so that the investor can hop in and he can or she can invest in your company. When you create a company structure from the very beginning, if you have a structure like, okay, you know what, principally I am totally okay to dilute 25% of my stake. If you have that kind of mindset, you put an option while creating the company that rest of the other teammates, the directors, the board of directors, they're getting probably 10% each. It can be 5% each. But if it is 10% each and you as a founder, you are getting probably 30%. So that becomes your 50 plus 30, 80%. So 80% you reserve in the company. 20% you are willing to dilute to the next investor. If you have that structure, try to maintain a lower equity dilution in the initial phase. Get someone on board who is a seed level investor. It can be me, it can be somebody else. If you wish, probably after the session, I'll be more than happy and glad to introduce you guys with few of my angel networks who will be more than happy to cross-check your business. If you are investable, of course, we'll be more than happy to take it forward. But for the sake of the speech, if you have the total structure ready like this, 20% is actually there for the investor. The tips and the suggestion would be, initially try to dilute less amount of money. less amount of equity. Get someone on board who is from the similar same kind of business. Don't get an investor who can only give money, like a sleeping partner. That's really bad for your organization. Get someone on board who has got market connect, who knows your business, who is from probably the similar kind of field, and he has faced the same kind of challenges in your, in your business, which you are facing now. The best possible investor can actually give you market connect, can actually give you more business. And of course, that's how they can also protect their interest. None of the investors are going to invest money, my friend, just for the sake of investing money. They are not doing charity. When I put the hat that I'm an angel investor, in my brain, it is playing that I need my money back. I need to multiply it. So as an angel investor, I'm not at all thinking that if I'm giving it away, right? I need my money back, of course. I need a multi-folded money back. Otherwise, an angel investor would probably go to a bank and put his money into the bank on a percentage basis and probably go for a stock market. Why they will invest in you? The only reason is if they have $100 in their pocket, they will invest probably $20 into different startups. So that becomes a 5 different startups, and probably they'll get one success so that their total investment comes in a multi-fold, probably $200. So they are looking for you, who is probably a potential unicorn for them, so that you can make money for them as well as for yourself. So a money-minded angel investor who is willing to give his network and time and probably his own expertise is a winner for you as well as for him. So how will you get those kind of investors? Of course, there are forums, there are portals, there are clubs, there are associations wherein probably you can pitch your idea, you can talk to those gentlemen, probably you can talk to the fund manager, and maybe they can give you a grant and access. Probably you can talk to the investment bankers. They can, of course, help you to get in touch with all those investors. Now, when you talk about investable company, if I may move from startup stage, I was actually talking about startup stage. Let me move a little bit from startup stage to probably a scale up stage. Say, for the example, you are running your company for last 5 years and you are looking for business expansion. And according to your calculation, you feel that you can actually grow in the same speed. And probably to reach your desired turnover, it will take next 7 years. But if you get some amount of money, which is kind of equal money that you want to probably earn for next 7 years, and reduce it by 30%. For an example, if you need $1,000, okay, for next 7 years, you slash down 30%, it becomes your $700. And you ask that money from a potential investor. I'm just giving you a rough example. That's not the money that you're looking for. We all know that. Neither investor will invest only $600. That's peanuts, nothing. In any case, so if you are looking for that $700 and you feel that with that $700 you can actually achieve your goal within the next 2 years, then this is the right time to raise your money. Maximum number of startups or companies, they do a mistake. They try to raise money when they are running out of money. Don't try to raise money when you are running out of money. Try to raise money way before your money is gone. Try to raise money when you have a situation that, okay, fine, I can actually sustain for next 6 months, but yes, if I get this money, I can continue and I can, reduce the timeline from 7 years to 2 years. If that's your situation, try to create your paperwork so simple that an investor can see that, okay, fine, for last 5 years, this guy has been potentially incrementally growing. Maybe he is not earning money, he is not that much profitable, but if I invest, this volume business can grow exponential. So you need to create your organization in such a way so that expansion curves are really smooth. So if I may go back to my economics degrees, whatever small and big I have done in my life, in economics, there is a curve called MU curve. So if you go through that MU curve, we need a curvature for your company growth which can actually give a slanting like this, and this slanting can go up to this line, which is your 5 year, okay, and it can grow exponential smooth for next probably 3 or 4 years. If your exponential growth is really smooth, of course any investor would be more than happy to put their money because they can foresee it what is going to happen. Now this thumb rule is applied for SMEs. This thumb rule can go with MSMEs. It can be for maybe a small and big scale business. But when you go for any kind of corporate structure, honestly speaking, there is no formula. It all depends on how and what kind of money you want. And for corporates, usually it's a business expansion. It can go with a small company as well. I'll go with one example in my life. I can go with multiple examples, but I'll take probably 2 to 3 to help you guys. So I'll take one example from India, I'll take one example from Europe, and I'll take another example from Australia. And if time permits, I'll take another example from some other countries, Africa and US as well. I'll try to make it very simple. So this example is from India. I met the group of people, group of startups who started their journey from Gujarat. It's a state in India, and they were into one incubation center based out of Gujarat, and they are asking for help. And they say that, sir, we have a product which can actually give vision to blinds. So I said, what it is? So they showed me a small device. So if you hold in your hand, it can actually help the blind people to walk smoothly. It is got the sensors, the AI-based system, which can give them a enhanced signal so that they can understand if there is something coming in front of them or not. And if it is, what is the size and what is the speed, so they can sense it in their skin. They were not doing very good in India, and they were asking that if I can help them to probably take things forward on a very structured way and maybe raise some amount of money from the market. So what I did, I had a deep tasting with their product, had a chat with two of the founders, and then I realized probably yes, I can help these guys. So initially what I did, I actually took them to a few of the NGOs who are working with blind people, visually disabled people in Africa, raised few round of money for the same from US, and took them from India to African market. And slowly, within 1.5 years, I pulled them up into the Middle East market so that they can grow more in Middle East market. And they got awards and all after my recommendation. The reason I'm sharing you this story is not always angel investor like me, not always just say that, hey, I just put money and you have to do on your own. So sometimes I go beyond my limitation of angels. So there I call myself as a community builder or probably a supporter. So that one example I wanted to give you. So it's not always that we angel investors always only invest money. We always try to keep it very simple so that we can give them market connect and of course take them into a different height. The another example I'll be taking from Europe. So in Europe, of course, there's a place nearby Ukraine where people were doing a lot of leather garments works, and the guy, he was really passionate enough to run his own fashion store, which is leather garments, shoes, and of course, few of the leather. I'm sorry, few of the fashionable dresses, suits, bows, ties. But sometimes, probably within your country, sometimes you don't get a lot of traction. You don't get a lot of people who are actually buying your product. That happened to that fellow, and he was a nice guy. Was talking with me. We met in a conference somewhere. I forgot, maybe somewhere in UK or somewhere like that. And he was chatting with me in social media. Said that, you know what, I'm not actually earning money at the moment, but I really want to grow. My products are this kind of products are there. So could you please help me out? I said, no problem. I mean, let me check what best can be done. So I saw that this fellow actually create great suits and lovely shoes. So initially, what I did, I actually put few bit of my friends who can support him on an investment side. Now, when I mention friends, these are my investor friends, like of course the angel syndicate bodies. So they put that fellow diluted around 25% of his organization and got a little bit of money. So what we did together, we started doing rigorous marketing for him, and we put his products as a white label product with a couple of more brands so that he can sustain himself, and of course the investors can earn and safeguard their money. Slowly that white leveling became a bit of large, and he now managing a company with around 60 plus employee strength. Now just remember, he was about to close the business. So with investment, with proper network, with guidance, with proper structure, what happened by diluting only 25% of his company, he is not only sustaining, rather he is actually running a 60 plus people company. And now he is trying to brand himself as a brand from Ukraine, a place called Odessa, and he's trying to grow more. Next example, I'll go with another example from Australia. Um, Although this is not very small, but it's a decent size of deal that we did. So there was a guy who wanted to start something on alternative power, on electric run battery for cars. He wanted to set up a factory, and that fellow is really, really good fellow, and he wanted to start his own factory over here in Asian continent. And what we did, we found land for him, and of course, few bit of investment from few of the banks, so that he can get the loan and start his factory. And guess what? It's just a pretty simple story, but there's a lot of complicated thing that happened in the back end. The reason I wanted to share this is I'll explain it. So what happened? I'll tell you first. So he got few bit of loan from banks, and of course he raised a few $1 million from investors, which is a growth fund. And the expected return would be within next 5.5 years. The only reason we are expecting something like this because that's the trend that can happen on this kind of battery project. But the fun factor is when you look deep into his company structure, he never ever said that, hey, you know what, I need money. He wanted to expand his business. The only point that he was concerned about is how he can get a proper local partner who can probably help him to explore the market and get in touch with the market. So I can go on with examples like this. There are multiple number of examples that I have. In fact, I'll be more than happy to share another example, which is from the villages, from one of the Asian village very close to my heart. And of course, I would love to share that. So there were a group of women who really cooked well, and they are very proud about their cooking. And they say that, hey, you know what, we are a group of moms and we are really great cook, but nobody is actually listening to us or looking at us and say that, hey, you guys are really great cook. So why don't you get this business? So what I did is like I told them that why don't you start your own kind of bakery, and instead of doing only the Asian dishes, why don't you probably do a very specific kind of bakery with Asian touch in it? Why don't you create your own signature dishes? And why don't you go all vegan? So that started in that particular location, and slowly they 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 asked me that how can I grow then? So I said, okay, fine, hold on, this is pretty easy. I'm gonna connect you with few of the channel distributors who are using local homemakers, wife, sisters, daughters who love to cook, and they have an ecosystem. And whatever order they get, they actually cater that office to office. So, if it is okay, would you like to be a partner for these kind of business where they deliver the food, but you deliver the dessert for them? And that becomes a perfect marriage. So what happened eventually, these ecosystem, managed to handshake with that ecosystem. So the dessert people, like who are creating those bakery items, sweets and all, they started giving a lot of food and delivery item to these original office delivery supply mechanism. So the FMCG business became really cool and sustainable, and they expanded from their country to two different countries at the moment, and they are right now servicing, or rather giving their food and other elements to local universities, to local colleges. People are happy, and of course fundraising is one part of it. The only factor I wanted to share you is, it's not about how good you are by creating your paperwork in 1 hour talk. I mean, don't expect that I can give you all those tips that can, make your company a sustainable, investable company. You need to understand the PE multiple. You need to understand whether your P plus PL is working fine or not. You need to understand the curve that's going on in your company. If it is not profitable, not a problem on that. If it is probably sustainable, create a benchmark, create kind of disruption. That's the best way people would love to invest money. Now, I actually wanted to make it as a workshop mode. So if you have any kind of question, I'll be more than happy to answer that. And that's, I think, the best way we can interact, instead of me giving a lot of other example and giving a monotonous speech. So I'm open for Q&A if you have any. And I'll go back to our beautiful host. I think she can manage the questions for us. You did?
Hello, yes. So thank you for the very insightful talk, Mr. Arijit. You were able really to simplify your topic, and your examples were really helpful. So I think the first question would be, what is the first piece of advice or the first step that you would advise a company to take if they wanted to scale and get investors? What's the most crucial thing that you think entrepreneurs need to know?
Beautiful question. So the first thing that you need to understand, who is not your customer. It's not the point of who is your potential customer. A lot of companies do a mistake. They take Google data and put it in a piece of slide and show that, hey, there is $100 billion business and I'm going to get 10% of it. Oh my God, that's with due respect, that's fine, but you can't get that $100 billion 10% within next 2 years with any amount of money. That's not possible. Let's be realistic. Let's come to a point, who is not your customer, remove them first, and then bring it down to your locality and say, hey, I've got a $1 million business, but I can get that business 2% of that business if I don't get any money. But if I have money, I can get probably 5% to 7% of that business. If that's your situation, that's the best tip for you. Are you really gonna do it? 2%? And with money, can you really execute that 7%? If you can answer that, I think there is a lot of opportunity for you to probably get some amount of investment.
Okay, thank you. Thank you so much for that. So I think another question would be, what do you think companies should avoid if they're trying to attract investors?
Well, be yourself. I mean, don't show off. We understand what is showing off. Try to be honest. Try to be realistic. And another tips would be, never ever try to get a big celebrity in your board. That is not very cool. If you have a big celebrity on your board who has got, say, a good amount of percentage as a board of director in your company, as an investor, investors might feel that, okay, there is a celebrity, so probably there will be some issues if this celebrity is not there in the company. It might affect the brand. Okay, if you have an intention to have some celebrity, I'm talking about TV celebrities, I'm talking about movie celebrities, not industry celebrities.
Yeah.
Industry celebrity is good. If you get someone who is an industry celebrity, like maybe big industrialist, that's really great. But if you're getting someone on board like a movie star or something like that, maybe a model, I'll recommend not to do that. Number one, I have seen people doing that, but that's not very cool to, and that's not a best practice, I can say. But if you really want to do that, get them on board on a percentage basis instead of a director level. That's one of the best way. And if you are trying to understand the market position, I think there are market research companies who can actually give you those research paper instead of getting data from the Google. So invest a little bit so that you can get those market data, and if required, it's open invitation to all of you. If you need any kind of support and help, Entrepreneur Face will be more than happy to help and guide you about all those research data.
So thank you for that. The next question would be, what do you think about outsourcing to optimize business processes as opposed to doing everything in-house?
Amazing, amazing. I'm so glad that you bring out this question. Okay, so there are two situations for outsourcing. If you can do it on your own, if you feel that you have all the capabilities, all the team strength, then why are you outsourcing it? Probably
Mhm.
the moment that you need outsourcing is the moment where you are overloaded with your work. It can be one situation. Second situation could be you concentrate on your business, let the other specialist do your work. For an example, I'll give you one example. Maybe you are great in making juice. You are a juice making company. Okay. Maybe you create cranberry juice, you create mango juice. I don't know, maybe any kind of juice. But you specialize in making juice. There is no point outsourcing that juice part, okay, to somebody else. But the wiser person will outsource the designing portion of your business, in the sense creating logo, creating brochures, creating banners, that you may think of outsourcing to some other startup. Can be an existing company, doesn't matter. But when you do
Mhm.
that, you don't have the headache that, oh my god, the color is not right, oh my god, I should position this portion to somebody somewhere like this, and I'm totally lost because I'm specialized in making juice. I can test it, but I don't know how to do the designing part. So that's one of the best way. Outsourcing is really great when you really want to concentrate on your own venture. Okay, let me tell you something. For an example, as a business, as a mother business, our mother business is into game development, virtual reality, extended reality, blockchain solutions, AI solutions. We are not a web designing company. Okay, but whenever we get any kind of web designing orders, people usually ask us, we outsource it to some third party. I'm just giving you a normal example. Okay, so if you have a
Yeah.
specialization, stick to your specialization, expand. But when you get the order, make a very close group of team who can get your orders and get it done. You put your banner, not a problem. People will be more than happy. Okay.
Thank you. That was a very good answer to that question. So the next question would be, how does a company keep investors? What are effective measures to ensure that these investors will stay and support the company?
I'm sorry, I couldn't hear you. Could you please repeat?
How does a company keep investors? So what are effective measures that a company can employ to ensure that their investors will remain and support the company?
Well, I just spoke about it. Of course, your team, that's one of the vital point. Your USP in the business, that's another vital point. And why are you different? And how much money you can actually bring for the investors. These are the key factors. And of course, the market demand, which is happening at the moment. And uh, probably in future, what will be the market that you can grab, maybe next 5 years projection. So this is pretty important to create a 5 years projection plan for your venture.
Okay. Thank you very much for that. So the last question that we have is, what for you, how important do you think automation is in creating a company that is scalable and investor ready?
Could you repeat? I'm really sorry, I can't hear you.
Uh, what do you think the role of automation plays in creating a company that is scalable and investor ready?
What is the role of automatic what?
Automation.
Okay, what is the role of automation? Okay, fine. Well, automation is really great. I mean, it's a great way of scaling up any kind of company. So if the question is if automation is a driving factor for investment, well, the answer is yes. If you have an automated system, automation can enhance your productivity. That's one of the best way. But automation shouldn't exit or leap behind the human brain. So even though you have created automation into your organization, everything is smooth, everything is structured, you feel that the next step would be probably within next 3 years, and you guys can probably execute things very smoothly, and you have everything ready in your hand. You need some amount of investors who will probably making it on a bigger scale, larger scale. Try to remember these automation factors is actually governed by human brains. So make sure you have the C-level position like CXO, CTO, CIO in your organization who can actually manage these automation stuff. Okay, until unless you have these positions, you have these people. When you grow as a board, when you grow and raise some more capital, probably the growth capital, it will be very difficult for any investor to decide and take a decision. So automation cannot actually play a role when you're raising growth capital. Now it depends. Are you raising scale up capital? You are raising seed capital. You are raising it for only marketing. You're raising it for only team building. Now this answer can be bifolded depending on your situation. It cannot be a generic answer, but yeah, theoretically, it should have a C-level position so that people are comfortable enough to invest.
Okay. So I think those are all our questions for now. Thank you so much for answering all of them and for sharing your insights. It was really a good learning experience. Sir Arjun, do you have anything that you would like to promote?
Well, I'll be more than happy to probably connect all of you. Like, if you really want to connect me in any social media, anywhere, I'll be more than glad and happy to answer your questions. I'm not sure how many of you are watching me live. If you have any kind of question after this live session, you can find me in Google. Just type my name, Arijit Bhattacharya, Arijit Bhattacharya. You can get my website, you can get my social links. I'm totally active in Instagram and Twitter. So my Instagram handle is Arijitin, Arijitin, and my Twitter handle is ArijitGames, Arijit Games. So please feel free to follow and shoot me questions in my message box. I usually answer, so I answer around 300 questions in a day. So don't worry if you're shooting me more questions. Always there and happy to help.
Thank you very much for joining us today. So, for everyone who attended this webinar, all of you can get a digital certificate of your attendance. Just head on to our website at www.esme.ph or click on the link that we posted in the comment section below. Make your own account and navigate to the title of the webinar that you joined in today. So before this webinar comes to a close, I would like to invite everyone who wants to learn more and increase their knowledge and skills. Just visit our website. Again, it's www.esme.ph. There, we offer a wide range of masterclass courses, those of which you can enroll in based on whatever is relevant to your passion, career, and interests. Again, thank you so much to our speaker, Mr. Arijit Bhattacharya, and thank you to those watching. Happy holidays, everyone, and stay safe. Thank you so much. This is Micaela Milian from ESME Philippines.